So let's talk about Michael Saylor. You know him, right? The guy is basically the king of corporate Bitcoin. His whole deal is super simple. Buy Bitcoin and then, well, buy even more Bitcoin. But his latest move, it has everyone, and I mean everyone, from Wall Street pros to his biggest fans, just scratching their heads. So what's going on? Let's try to figure this out together.
Yeah, this is the big question, isn't it? The one that this whole story hinges on. Why is the world's biggest Bitcoin bull suddenly hoarding cash? I mean, this is the guy who famously calls regular money a melting ice cube. So why would he suddenly start stacking billions of US dollars? It doesn't add up. It feels like a total 180.
And you can really see that disconnect right here. On the one hand, you've got the Michael Saylor we all know, the guy who just relentlessly buys Bitcoin. But on the other hand, his latest move is completely different. He just raised an absolute mountain of cash and then didn't buy a single Satoshi with it, not one. So again, what on earth is going on here?
All right, to get to the bottom of this, here's how we're going to break it down. First, we'll look at the surprising move itself. Then we'll dig into what could be a pretty brilliant financial strategy, the credit rating gambit. After that, we'll see how the community is totally split on this. We'll also hear directly from Saylor on why he's so bullish. And finally, we'll put all the pieces together for the final takeaway.
Okay, let's dive into Section 1, the surprising move. And really, to get this, you have to understand the sheer scale of what just happened. The numbers we're talking about are, honestly, they're kind of staggering. Check this out, $748 million. That's almost $750 million raised in just 1 week. Let me put that into perspective for you. That's more money than his company raised in the entire first 11 months of 2023. All of it in 1 week. And with that infusion, their total cash reserve now sits at a whopping $2.19 billion. You know, this isn't just some rainy day fund they're building. No. This is a massive, massive war chest. And this quote from JLD really says it all. It shows just how out of left field this move was. Even the die-hard supporters, the people who follow every single thing Saylor does, were totally blindsided. They were all sitting there thinking, okay, here comes another huge Bitcoin buy, and then he did the exact opposite.
So if the plan wasn't to buy more Bitcoin right away, then what was it? Well, that brings us to our next section, the credit rating gambit. This is where we start to see the master plan, and it's a really sophisticated financial play. It all centers on this one key idea, an investment-grade credit rating.
So what does investment grade even mean? Think of it like getting a financial superpower. It's a signal to the big lenders, the S&P Globals of the world, that your company is an extremely safe bet. And when they see that, they're willing to lend you huge amounts of money at really, really low interest rates.
And that's the key to what some are calling the Great Unlock. It's this 4-step plan. Step 1, you build this giant USD battery. That's the cash. Step 2, that cash pile helps you improve your credit rating to that all-important investment grade. Step 3, that rating unlocks access to tons of cheap capital. And then the final step, Step 4, you use that cheap money to acquire even more Bitcoin, but way more efficiently than you ever could before. It's a long game.
But this cash hoard does more than just set up the next big move. It also builds like a powerful defensive fortress right now. It means the company can easily weather a nasty Bitcoin price drop. It calms down the people who own their bonds, and it's solid proof to the credit agencies that they're financially solid. Just to give you an idea, that $2.19 billion, it's enough to cover their dividend payments for almost 32 months. That's a huge signal of stability.
All right, next up, a community divided. And as you can probably guess, a move this big and this, well, unconventional has split the investment community right down the middle. People are asking, is this guy a genius playing 4D chess, or is this just erratic and reckless?
So on one side, you've got the skeptics. People like this analyst, Chris. He's worried that Saylor is getting a little too confident, maybe taking the market for granted. He sees selling off new shares to raise cash as erratic, and even suggests it comes from a sense of entitlement that could seriously backfire.
But then, of course, you have the other side of the coin. An analyst, like Jeff, looks at the exact same information and sees something totally different. He sees quite literally off-the-charts financial power. To him, this isn't erratic at all. It's a sign of never-before-seen financial strength. So to really get why Saylor is making this massive bet, we have to look at it from his point of view. And let's just say his view from the inside is incredibly bullish. To put it mildly, he thinks the fundamental groundwork for Bitcoin has literally never been stronger than it is right now.
And this quote from Saylor himself really is the key. He says the last 12 months have probably been the best 12 months in the history of the entire industry.
He's not talking about the daily price swings. No, he's looking at the deep down fundamental plumbing of it all. And from his perspective, what's happened over the past year is just profound.
And I mean, look at the timeline. It's been a historic year. You had supportive statements from the U.S. administration. You had these spot Bitcoin ETFs getting uncrippled, which led to the derivatives market just exploding. And then the big one. Mainstream banks finally started announcing they were getting in on it. Every single one of these events is a massive game-changing shift. And if you drill down into the details, it's even more impressive. We're talking favorable guidance from the SEC, the CFTC, and the IRS. You've got major banks, the big guys, now custodying Bitcoin and even extending credit against it. The digital credit market went from $0 to $8 billion in just 10 months, and banks got the green light to handle crypto for their customers. I mean, think about it. A year ago, all of this stuff was basically a wish list. Today, it's reality.
Okay, so let's get to the final takeaway. What do we make of all this? How do we connect these two seemingly opposite things, hoarding a bunch of cash and having this incredibly bullish long-term vision for Bitcoin?
Well, when you put it all together, it's pretty clear this wasn't a retreat from Bitcoin. Not at all. It was a strategic fortification. He's not backing down. He's building a financial fortress to protect his strategy and get ready for what he sees as the next huge wave of adoption.
At the end of the day, it's that classic trade-off. A little bit of short-term pain for a whole lot of long-term gain. Yeah, in the short term, selling more shares dilutes the value for existing shareholders. That's the pain. But the gain? The long-term gain is building this incredibly resilient engine that's ready to play the long game and absolutely pounce on the massive opportunities he sees coming just over the horizon.
And that really leaves us with one last big question. What we're watching here is someone writing a playbook that has literally never existed before. So, is Michael Saylor just making a series of erratic, risky moves? Or are we witnessing him financially engineer a completely new corporate paradigm, right here in real time? I guess only time will tell.